The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 31st thoughtful Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock on this thoughtful and terrific Thursday afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648 internationally, 727-445-1044. That way, you and I, we can put four eyes on whatever it is you're looking at. We'll take a look at the bullish side, the bearish side, figure out what your instrument is doing. So let's go ahead and get this show started on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up about 23 points, trading at 17,739. S&P's up about 1.5 points at 2065. NASDAQ Composite up 15 points. That's trading at 4884. Russell 2000 up 6 points, trading at 1116. The DAX closed off 81 points. The FTSE closed off 28. Gold is up about $6, trading at 1234. Silver's up 18 cents, trading at 1539. Light sweet crude is flat right now, trading at 39.68. Leading the charge here to the upside. Individual stock-wise, you got Medivation. That's on, I believe, a rumor of a takeover. That's up $8. You got Jazz Pharmaceuticals up nearly 8. That's 6%. Tesla up about $7. That's 3%. Lending Tree up 7%. Ooh, up $6.66 out there. Biogen, BIIB, that's up $6. A couple of percent out there to the downside. Priceline. Priceline can't make up its mind. One day it's down, and the next day it's up. Today happens to be the day that it's down $16, off about 1.25%. Lindsay Corp. That's off $6 and change, down about 8%. Google's off $5, less than 1% to the downside. So, happy Thursday. You know what it means when it's March 31st, don't you? Well, it means two things. It means it's the end of the month, but it's also the end of the quarter. And what an interesting quarter this has been. So we should, which we don't do very often, in fact, you'd probably only do it on a quarterly basis. Why don't we go take a look at quarterly charts to just understand what the market has actually done, see if there's any kind of message out here. And let's start off with, let's take, I got the New York Stock Exchange up. So if you're watching this on TigerTV, and I hope that you're not, but I'll explain to you what it is we're looking at in case you're not. What we're taking a look at is each of these candles represents a 3-month period of time, a quarter, broken down into our calendar year cycle. And we can see that if the New York Stock Exchange were to close where it's trading right now at about $10,235.74, it would form a hammer candle. A hammer candle forms when the market is really trying to hammer out a bottom. Now, you and I, we have an expression that we'd like to use, and that is if you close below a hammer candle, if you're long, you're wrong. So it actually says a couple of things to us. Number one, the bulls have protected that low that took place during this quarter. Very important low. If you see a close below that, you know it could be curtains. But we also can see inside the New York Stock Exchange a real consolidation pattern, because the opposite of the hammer, when the markets are moving higher, right, the only way a hammer candle can form is if the markets are moving lower. Sideways doesn't count. You've got to be moving lower out here. The only way its brother, its cousin, its sister, whatever we might call it, when things are moving higher is the shooting star. And that's what the New York Stock Exchange has. So the New York Stock Exchange has set up a wonderful level of both resistance and support for you to understand if the markets are going to bust out the highs and move higher and continue on, or whether they're going to try to bust out the lows, or what we may be in here right now is a consolidation pattern. So if we take a look at the quarter that ended in, this is June of 2015, that is your shooting star candle out there. That says that high is resistance, as this month's or this quarter's low, which is at 89.37.99, happens to be support. Now let's stay with the New York Stock Exchange. This is a quarterly. You might say, hey, I can't learn a lot from a quarterly. Well, actually you can. You can see that when the New York Stock Exchange has made either bullish, and I've got all the different, whether they're tradable, bullish or bearish signals on here, I've got them all showing up on the screen at this stage here. So you can see that when the market made its high back in 2007, it did it by showing a bearish reversal signal, just as it did up here at the top back in June of 2015. But now we've got the bullish signal at the bottom. In 2009, in June of 2009, from a quarterly perspective, you had a nice big old bullish engulfing candle. So we want to be paying attention to what the market is communicating to you and I. So that's what it says on a quarterly basis. If we look at just for the heck of it, let's go look at a monthly chart. This happens to be the NASDAQ composite, but we'll switch it over to the New York Stock Exchange here in just a moment. If we take a look at the New York Stock Exchange, just simply from a monthly perspective, this shows that we've got another bullish reversal signal. You've got the morning star. So on a monthly basis, which really is, in order to get this pattern, you need at least 3 months. It can be more than 3 months. But if we take a look at the last quarter, we have both a hammer on the quarterly chart and we have a morning star on the monthly chart. So the lows that were put in here, in this case here, it was the lows during, it looks like, that could have been January or February. They're both really, the so-called double bottom out here. Inside the New York Stock Exchange. So that's the message of the New York Stock Exchange. If we take a look and we go dive down into the daily time frames out here, let's go ahead and pull this chart up on our screen. So here's a daily chart for the New York Stock Exchange. And we're not taking a look at bullish or bearish reversal signals here. Instead, what we're taking a look at is the descending price channel that the New York Stock Exchange has broken out of. So the New York Stock Exchange was clearly in a down channel. At this stage, nothing more than what we'll call a subcorrection channel. Now, why do I say that? Well, I say that for this reason here. Let's go back to this chart. Well, we haven't been there, but let's go to this chart. Let me turn a few things off here because we don't need to see a lot of this data. So I'll turn off this. There we go. And let me get the New York Stock Exchange up here. And as I pull that up, let me just do this. I'm going to change this to a quarterly right now so you can see what it is we're talking about. So here's remember, the trend is our friend. The trend is the market's friend, right? And if we take a look at the New York Stock Exchange, this comes back to the lows in 2009. And then the next touch point that I use out here in order to understand the trend is a low from 2011. Now, that low is priced at 64.14, and a bit of change. The low in 2009 was priced out at 41.81. So you can see the green trend line. We can see how price is above the trend line, right? So it's above the trend line. We know that as far as the New York Stock Exchange, from a quarterly basis, price is above that trend line. When we get back from this break, apparently because I'm just so long-winded, let's continue taking a look at the New York Stock Exchange. But I mentioned subcorrection channel. Price came down, in essence, held support. Now price is moving higher. Let's go see what additional interpretations we can get out of the New York Stock Exchange. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 19, S&P's up a point, Composites up 14. We're taking a look at the New York Stock Exchange. We started off looking at because today, in essence, is the end of the quarter. And I don't know how today ends, and maybe it's not a hammer candle when it all is said and done by day's end. But let's assume that is the case at the moment out here. It would give us really, the way that I would interpret that is that the New York Stock Exchange is in kind of a consolidation up at these highs, hasn't broken the trend, so it is not the bears that are in control. This is still the quarterly chart that's on my screen out here. We can see from a daily perspective, that green diagonal line, we can see from a daily perspective, yes, we've had closes below that level, but when you break a trend line, price will typically try to get back inside that trend. So if we take a look at the daily chart, that's exactly what it did after we had this double bottom pattern out here from a daily perspective on February 11th. We saw price got up and tested it on March the 2nd, March 3rd. It got back above the trend line. Then actually came back and retested that trend line on March 8th, rejected it, retested on March 10th out here. So the New York Stock Exchange, if you are a connoisseur of the NYSE, this thing is back inside its trend. We cannot argue that. Okay, so that's what this daily chart shows. I'm going to show you a different daily chart because I've got a couple of other things for us to consider out here. So we know that the channel line has been broken. As long as that holds, that is bullish. Now, if the New York Stock Exchange, as example today, everybody, all of a sudden the sellers show up as soon as our polar bear comes on at 2 o'clock, or I heard Tom has got his bear suit in hiding somewhere, especially while he goes up to Boston this weekend. But here's the deal: he'd take it out of the cleaners for sure if we were to see it close below about 10,181.83, if I were going to be exact out here. And that's a little black squiggly line going across my screen. But the bottom portion of the screen is really what I want to bring our attention to. And that is, in the case of the New York Stock Exchange, we know that the market has gone up, I think market's gone up on really light volume over the past couple of weeks out here. Now, the New York Stock Exchange, this middle panel here, happens to be the volume oscillator, which I get at the end of each day out here. So I'm just tracking to see, hey, this move higher in price Is it being confirmed by volume inside the New York Stock Exchange out here? And as we take a look at it, let me do this out here. Let me get my crosshair. And the most recent high, and I'm really looking at this section in here, which has been making higher highs. But the new higher high that it's got to take out is from December the 20th. Now, if it can take out higher highs, as price is moving higher out here, you wouldn't have any kind of divergent pattern. Okay, and the reason why I want to point that out is because when the New York Stock Exchange typically makes serious highs out here, you will see a divergent pattern in a couple of different things. I've got the volume oscillator in the center out here, which hasn't confirmed the price moving higher. If the New York Stock Exchange finishes pretty well today, we might get that. But if I just were to take a look at advancing and declining issues out here inside of the New York Stock Exchange, let me go ahead and blow this up. This is the bottom panel of the screen out here. You can see that as price has moved, in this case here, just slightly higher. If I were to use a line, I would draw it just like this. It's just been slightly higher. But look at what the advancing declining issues. They have also moved higher. But many people just use the AD line out here. I have learned that what you want to be able to use is both. In fact, the volume oscillator, especially, is really, in my opinion, the more important of the two. And so when you have prices moving higher, let me pull this back just a bit out here, and the volume oscillator is not confirming that. Here's an example of one. This is back here. Where we saw and it's a slight nuance, but you got to pay attention to it. As price was moving higher into the May 21st time frame, that happens to be that May 20th or the 21st, the all-time high inside the New York Stock Exchange. If we take a look at the volume oscillator here, you'll see that it actually was moving slightly lower, was never confirming that. Now, in this case here, you happen to also have the same thing going. Whoops. You also happen to have the same thing going on with regard to the AD line. So the advanced decline line as well as the volume oscillator was also, now that I blow it up, you can see just both of them moving, slightly lower as prices were moving higher out here. And then you take a look at that little, or that now that's gotten a little bit thicker here, that black line on my chart moving below that was giving you the sell signal out here. So as we speak today, and just simply taking a look, well, now they really got bigger out here, and taking a look at the New York Stock Exchange, the advanced decline line is moving higher. And if we get a confirmation of this volume oscillator moving higher as well, then whatever the next top is in place, my reading would be that this is not any kind of major top here, which is what many people are thinking or believing. It just doesn't add up with regard to what we're taking a look at inside of this indice. We're not there yet on the volume oscillator. I'll have a better feel for it, tomorrow, maybe Monday, Tuesday. We'll just have to see out here. And I'm watching at the level of 10,183, 10,181.83 out there. So let's take a look at the New York Stock Exchange. A pretty good detail out there. Let's take a look. Let's go back to the this next 3 minutes or so. Let's go back and take a look at the quarterly chart just to put things in perspective as to the wonderful roller coaster ride and what it's actually meant. So there's the New York Stock Exchange. Let's go back up to the top here. Let's take a look at the NASDAQ composite. So the system will load up right here. Right now, we'll see there's no bullish or bearish reversal signal here inside the NASDAQ composite. We can see that the all-time quarterly high coming here from the July of 2015, the low there 48.88, 48.88.17. You're at 48.82.51. You know how it works. If you close inside a swing point, says you're going to go test the highs out here. So today you need if this were to close at 48.88.17. Would say that it wants to go move up to those levels. It's not there just yet. If we take a look at the NASDAQ composite, let's look at the Dow, I'll be able to say it, Dow Jones Industrials out here. No bullish reversal signal, but back here, as it was making its high back in June of 2015, you can see the old shooting star. So that says from a quarterly standpoint, that high of 18,351.36 is really important. You break above that. And but this is, somebody was going to call the Dow Jones Industrial. Would you call this, when you take a look at it and put it in perspective, that the Dow Jones is in a bear market? Is there anybody out there, anybody out there that would be taking a look at this and saying that this is a new bear market for the Dow Jones? No, the answer is absolutely not. You cannot make that. You cannot make that statement in taking a look at the charts when we take a look at, in this case here, the Dow in the 3-month chart. Now let's take a look at where the Dow Jones transports. Let's go see what it is doing out here. So this is going to load up the transports. And the transports, much like the New York Stock Exchange, which clearly have been in decline out here. But if we take a look at the transports, a couple different perspectives, this is coming back to the 2009 level out here. What we can see with regard to the transports, all that it did, won't move any further for me, but here's the trend line, that red line out there. I don't know why it won't move any further, but you can see that all price did inside the transports was come back, test support, reject support, and you've got a hammer candle here. Now you've got these little 3 black crows. You've got 2 sets of them right from the highs out here. Tom always believes that the 3 black crows will get tested. So what does it say about the Dow Jones transports? The Dow just would say then, if you believe that is the theory out here with 3 crows, that the Dow Jones with the hammer and having 3 crows at the top, that it's going to go ahead and move higher out there. As Colonel Klink would say to Schultz out there, very interesting. Now that's the bullish side of the picture. There are some bearish things for us to be concerned about, so let's go take a look at those. See Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up about 15. S&P is about flat out here. So we've been really studying the longer-term charts out here for the markets by taking a look at quarterly charts out here. Take a look at where we're at and utilizing Japanese candlestick charting when we can to help the market communicate to us what it's trying to do. Now, we've taken a look at how these longer-term trends have held out here across the board, all indices. It used to be the New York Stock Exchange, which we were looking at, was the only one that was down below the trend line. It's now back above. So all U.S. indices, and here I can show you, give you the snapshot of that picture real quickly. If we take a look, here's all of the primary U.S. indices. So we've got 9 of them out here, and all of these are above the trend line, including New York Stock Exchange, which is in the lower center there, because it's monthly chart and the thickness of the lines, a little bit hard to determine that. But you and I just did that by drawing that trend line and then take a look at the daily charts and understanding exactly, where price is at. Now, so that establishes the long term. Okay, long term right now, bullish. If the volume oscillator inside the New York Stock Exchange comes in with a higher high, what it suggests is that there's higher prices to go. That doesn't mean that it's tomorrow. It doesn't mean that it's a week from now. It just means that probably within the next 30, maybe 45, maybe the next 4 months, prices should move higher out here until those lows are broken. And right here, and there is some reason to be cautious. And the reason to be cautious out here, I thought I put this chart together. Yeah, I did, right here. This is taking a look at the 4. This is taking a look at all 4 of our daily equity futures contracts. So the top panel, if you watch this on TigerTV, that's the S&P futures, the ES Mini out here. The Dow futures is the one just below it. The Russell 2000 is the one just below that. And then panel number 4 happens to be the NQ. Now, if you take a look at the ES Mini out here, you're going to see that the pattern that had formed at the bottom, right? The pattern that formed the bottom, this is the bottom, let me get my crosshair out here. This is the bottom that formed on the trading day of February 11th. You saw that, and it's one of your favorite patterns. It's one of my favorite patterns where price moves lower, where you get that rubber band, right? The market is nothing more than a rubber band that stretches in one direction. It stretches as far as it can, and then it snaps back. And that snap of that rubber band as the markets were moving lower out here took place really on February 11th. The confirmation of that snap took place on February 12th when you had a nice old bull sash candle that had formed out here. Now what we can see is as of 2 days ago on March 29th, price was in the ES Mini was moving slightly higher. Yesterday moved a bit higher out here and happens to be, so we've got that stretch pattern that is out there. Now, look, just because this pattern shows up doesn't mean that price has to end there. This pattern here inside of the ES Mini started forming on January 21st out here. We got a signal on January 22nd. Turned out that it was a false signal out there when price moved below that level. But when price moved below that level here back on February 8th, we didn't get our next buy signal until February 12th. See that little black line, by the way, that is on my screen out here? It's something you absolutely want to be paying attention to because it gives you that confirmation, early confirmation, that the trend has changed, that buyers or sellers, if you get moved down below it, are the ones that are in control of the market. Isn't it nice to be able to understand that? It doesn't mean it's going to, anything can happen at any moment out here, but the idea, and then what I love about John Logan, many things, but one of the things I love is the phrase eliminating one side of the trade, and that's what this allows us to do. Now, so at this top right now, we have the potential of a topping pattern inside the ES Mini. So I would be saying shorter term, right? We're looking at a quarterly, then a monthly. Now we're down to the daily time frame. So keep things in perspective. The daily time frame, because you've also got a wave 7 out there, says you've got to be a bit concerned out here until this vacates itself or goes away, which it can. But at this point here, it says very much be careful, and it is being confirmed with two others, I should say. The Dow futures contract is doing the same thing. Now, yesterday was the very first time that it established that little price relative strength divergent pattern out here. It, too, happens to be inside a 7th wave. The high has not been taken out either in the ES Mini or the Dow above yesterday's high. Which pattern is more relevant? They're both relevant out here. The one that works the best is the one where price is moving higher or lower, stretching that rubber band, doing it with less relative strength and weakness out there, and then you wait wait for the cavalry to show up, give you the sign, and then get above certain lines of demarcation, and you're off to the races. Now, the Russell 2000 has also been stretching. We saw the Russell 2000 have a nice move a couple of days ago, 2-3 days ago. I forget, I think it was Tuesday out here. So, stretch itself. And, of course, a little doji candle looks like yesterday. Price moving higher, doing a less relative strength. Now, the NQ not participating in this deal. NQ has got a mind of its own, but we've got 3 against 1 out here inside of the market. So we now have a set of signals that says you've got to be careful, even though the quarterly and the monthly outlooks are saying things look really well. What does that mean? That means that if you are a bear, if you're already in, you want to see some confirmation of that. We do not have that in any of the indices, in any of the equity futures contracts, not yet. If you're trying to sell a top tick, then you wouldn't be using this daily chart anyways. You would be using some kind of intraday time frame, like a 30-minute chart or what have you. So keeping things in perspective, the daily says we got to be careful. There's a little. I don't think the next wave is going to be a tsunami, but you never know. You get in on the trade, you wait for certain patterns to show up, and then you can make a decision on whether to exit, tighten your stops, whatever it is you might want to do out here. But longer term, it does look like to me what the markets are communicating to you and I is that they're going to move higher out there. And, maybe the thing that Janet Yellen thinks she did out here, because of the way that the markets move without any conviction, price, certainly, but without any kind of conviction in volume, was that she saved the day. This is saying, and she's now getting people probably that are just only listening to what I'm saying about the quarterly chart out here. They're not staying with inside time frames that the market's going to move higher. I'm saying that if the volume oscillator inside the New York Stock Exchange gets to a higher high, then this message, we'll see higher prices by the end of April. That doesn't mean we won't see a pullback in between now and then, and that's what these daily charts are suggesting to us, but they have not given us a confirmation. A suggestion and a confirmation where you would take trade action are 2 different things. So hopefully that gives you an assist on what the markets are doing. And speaking of assist, looks like my Red Wings are not going to go ahead and make it into the playoffs here. They needed Philadelphia to fold last night against the Washington Capitals, and they did not fold. So I don't know if it's mathematically still a possibility. I think it's still a slight possibility. But and I think they play tonight. I don't know if they play tonight or. I think they play tonight. They've got to win the rest of their games. How many ever they have? 3-4 games left in the rest of the year out there, and then we get to playoffs. Playoffs just as we come into April, and you know that the playoffs don't end until like the middle of June or something out there. Pretty crazy. All right, so let's go take a look at some other things. We'll kind of shift back to more of the normal looks of what we take a look at when we get back from this break. So we'll take a look at some individual stocks. We'll take a look at some currency pairs. We'll take a look at the euro, which is really the only currency pair here that's moving. But if the euro can close above the high here from March 17th, maybe setting up an A to B equals CD. That takes it up to the 117-ish range, 117, 118. That'll put a bit of hurt inside the U.S. dollar index. So it's going to be interesting to see if that pattern plays out as we watch gold move lower. Right now, it's up $7.70. Trade at $12.3620. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, about a flat market. Dow's up 6, Composite's up 6, S&P is flat out here. So let's go take a look at. Let's go back to the euro just for a moment. We can see inside the euro versus the U.S. dollar, the currency pair. You can see 2A to B equals CD patterns out here. We're looking at one that formed here with that nice, huge, wide-ranging bar back on December 3rd. I'll pull this back just a bit, about as wide as you can get out here. Market moves up into a high the trading day of December 15th, then makes about a 0.618 retracement, slightly more than that, but about a 0.618 retracement. That sets up your A to B equal, potential A to B equals CD pattern. You get a confirmation as soon as price moves above the swing point. Well, that happened with a wide-ranging bar here on February the 3rd. And you've got no volumes to use behind the currency pairs out here, and that's why Japanese candlestick charting, or just candlestick charting period, is so important to be able to use. It provides us with a ton of information about what the buyers and the sellers are doing out here. It helps us to understand when one side or the other shows up in the charts out here to be able to defend an area. And that's really all this is a game of understanding those elements. In this case here, as price made its way up to this 1-to-1 level, the bears, the cavalry, never showed up. Never showed up. That was at a price point of somewhere around the $1.12, 1.124, we'll call it, somewhere right in that area. The bears didn't show up until right here, the cavalry, on February 12th. And that was the day before you had the euro versus the U.S. dollar make a 1 to 1.272 A to B equals CD. Almost made it really to the pip out here. But the bears showed up. Price did what? Price started moving back to the lows out here. Now, you had a low on March the 2nd. That, in essence, was tested with what? A wide-ranging bar, just like back here where the A-point began on December 3rd, 2015. You had that same kind of setup here that occurred on March the 10th. Then you get a retracement. So it moves higher for several days, about 5 days, makes its way up into the 113.42 level, makes a retracement. Now, this time around, instead of a 0.618 retracement, it's made a 38% retracement, a 0.38 in essence, retracement out here. And it has since moved higher. Now, today it is trading above the B point, the swing point. We don't have volume. It's not moving above it with a wide-ranging style bar. Day's not over. It doesn't even need to be a wide-ranging bar. Wide-ranging bar would communicate something to us, but this stage here, that doesn't mean that this is not going to pan out. And this says that if we close above the swing point from the trading day of March 17th, that until you see it close back below that level, what is communicating to us is price going to run up into the 116.7 area to the 118 area. And because the U.S. dollar index is so heavily weighted in euros out there, 50 some odd percent, 56%. That says that it would put pressure, weakness inside of the U.S. dollar index. Now, what could be offset by that would certainly be the loonie, the Canadian dollar, certainly be the yen, certainly be the Great British pound. And if we take a look at those currency pairs, example, if I take a look at the Japanese yen, there's basically a little movement here inside of it. Until it trades and closes above, that's the Japanese yen, by the way, the trading high from March 17th. I don't really know what it's doing. Because we're trading inside that swing point. The trade inside the swing point says you can go down and test it. So what it's saying to us is go down and test those lows. That would be in the 110.67. This is the daily chart we're looking at. Or if it moves back above that level, which is 112.95, then you'd have an A to B equals CD to the upside. But we don't have any of that information as we speak right now. If I take a look at some other tools, I would say as long as this trades below 112, and we're not there just yet. We're at 112.55. If it starts trading below 112, then that says that sellers are really in control and prices are going to go and move and test the lows of 110.67 out there. Dollar and gold are both going to go down. Yeah, Danny, I think that is the. Let's go ahead and put up the chart. Let's go put up a chart up here on the screen. Let's go take a look at gold. And let's put up the continuous contract. That way we can get a bunch of data. So here's gold. Put that on the screen. And because I made a comment, it'll be interesting to see how gold and the U.S. dollar are going to go in the same direction. That's really all I was saying, right? Gold can go higher, so the dollar can go higher, gold can go lower, the dollar can go lower. So let's go check that out. Let's do this by taking a look, instead of these candlesticks out here, Danny, let's go take a look at it by using nothing more than a line tool. So we're just looking at the close, and we're getting rid of all the hysteria during the day out here. So now we've got that. All we have to do is just go ahead and insert the U.S. dollar index. Oh, that was a study. I don't want to do that. We want to insert the U.S. dollar index. Now, because of the, so let's see. We'll just leave it as is. So let's go ahead and insert the symbol, and which is going to be DX #F. Oh, that's going to come up as a bar chart. We'll go ahead and we will go ahead and change that over. Let's go ahead and make this kind of like equal, right? Let's make this equal here, sort of equal as far as the panes there. No, we'll make it a little bit more equal. But let's change this. Let's make it nice and pretty so that we can see this here. So we come back, we change it from a bar, change it to a line chart, and boom, there we go. Now we have to say, can we look at this and see where you've got that so-called inverse relationship? Are there periods of time where the U.S. dollar index is going lower and gold is going lower? Well, if we come back to this high out here, you can see here in gold, just take a look at the top portion with me out here. And I'm looking at the date of March the 10th. Looks like that's when gold put in a closing high. And we can see that gold has been trading lower throughout that time. And if you take a look at the same thing with regard to the U.S. dollar index at that same time, what has it been doing? And that now I'm down here with my crosshair. Let me do this. Let me just put a line across just so you can see where it is that we're actually starting from, where I'm talking about. So I'm coming from right here, and that's going to line up with this level right here inside of the U.S. dollar index, right? So you can see that clearly from where we're at today compared to the beginning, which is I've started this on the same day, that the U.S. dollar index has moved back. And what has gold done? Gold has also done the same. So we can go back and see where these move in the same. Let's do it the opposite direction here, where the U.S. dollar index is going higher and gold is going higher out here, right? So this is where, from a correlation stand, whoops, did I delete that? I'll be a son of a gun out there. I did. Let me go back and take a look at, I got to go back and insert this. So I didn't mean to delete it, but apparently they're called fat fingers out here, right? Insert. Oh, come on, do me a favor. Insert symbol. There we go. It's already set for us. We've got to change this to a line chart, and we're okay. So let's go take a look at it in the opposite direction out here, right? We'll do that. We'll get our line. So here, where we've got the bottom chart is the U.S. dollar index. I'm coming back here, looks like to December 9th. And so we're really just looking at this box area right here. right now, right? So we're in essence looking at this area. And if we take a look, I'll go ahead and create that little line here where we began in the case of gold. Here's gold. And so what did we have happening in that same time period here? So, so you've got right here, here's where we started right here. So what did gold do during this yellow boxed in area where we began with the dollar, where you had the dollar moving higher and you had gold doing what? You had gold moving higher. So don't let anybody tell you that the two cannot do the Texas two-step and go in the exact same direction out here. And it appears that that's what we are going to see unfold here. Of course, you know that I'm on the side that says that sellers are in control of Goldilocks, and in a big way. And then we're going to see further retracement in gold. As far as the U.S. dollar index and the euro, it looks like the U.S. dollar index is also going lower out here. I hope that answers your question. Daily in Atlanta, this is Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. If you're watching this on Tiger TV, the screen that I've got up here, the panel, the one we're going to focus on, I'm going to go ahead and blow it up. It's taken, and we've talked about this the last couple of days out here. It shows the VIX index out here, and when you take a look at the VIX index, right now it's trading at 1381. It's up 25 cents out here, but it started the day at 1356. What I want you to focus on here is I have all of the forward futures contracts. You can see right now you've got the December contract trading at 2015. It was trading earlier this morning around 2019 or so, and you can see that if you take the difference, if you take $20.15 minus 13.83, you're going to get $6 and change, right? Or 6.50, 6.60, somewhere right around there. If you take that 6.50, 6.60 and divide it by the 13 and change out there, you're going to get very close to about a 50% delta. That is a huge contango. Now, the reason, so when we're taking a look at, again, coming back to the daily charts inside the equity futures contracts where prices have been moving higher, doing less relative strength out there, and why I say that shorter term. Now, when I'm talking shorter term, we're just dealing with daily. You and I have not even looked at an intraday chart as we speak, and we probably just won't here with only 3 minutes left to go in the show. So using the shorter term time frame now as the daily versus the quarterly and monthly and so forth, this is actually saying this has to get resolved. This type of contango, when you get up into that 50% level, can't use it as a timing tool. But it has always resolved itself with the VIX index getting back in line. And as the VIX index is going to move higher at some point here, what you're going to see is you're going to see the S&P 500 go ahead and pull back. What's the depth of that pullback? I don't really know. We know that now you've gotten the official stretch the rubber band. Here's just the daily chart for the contract. So now the pattern has to confirm. It hasn't done that as we speak right now. But you've got to just simply it's the same thing that formed the bottom. It's going to be the same thing out here that has formed the high. And so then once all that work is done to the downside, depending on what the New York Stock Exchange volume oscillator gives to us, will let us know whether prices are going to move much higher. But at this stage here, all levels of support have held. And, it's been an interesting 3 months. It's going to be an interesting 9 months ahead of us. If we have the time here, let's see, is there any questions out there? No question here about anything specific. Let's take a look at Tesla. Tesla's out with their new vehicle, I believe, today. And Tesla, what a nice little V-shaped bottom out here. It has made a 100% move by getting back to its previous swing points from December 31st out here, which is in the 235, 240-ish type of level. Today, volume-wise, what do you have in it? I don't know. I have to turn that tool on. So from a volume standpoint, you've got volume as this is pushing into a swing point. Now, here's where the downdraft is. Here's the real resistance. Volume of 6.8 million shares on January 4th. So you got 4.7. 4.7 with what 4.5 hours, 4.5 hours in the trading session. Let me see if I can do this real quick. So you've got 4.7 million shares, about 6.7. So you're actually moving into the area where it broke down with similar type volume, but it hasn't taken out resistance just yet, which is really going to be that gap or the swing high from December 31st. So folks, on this terrific and thoughtful Thursday, stay tuned for a terrific guy, and that's our man David White, our polar bear, and another terrific guy we've got, Tom O'Brien. And on Thursday, you get 3 terrific guys in a row, and that is Andy Heck to take it on home. So have a great Thursday. I look forward to seeing you on Fantastic Friday. Of course, tomorrow is the first Friday in the month. That means we've got the job numbers coming out, maybe a bit of fireworks. So have a great day, and I'll see you tomorrow. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.